Uber reported quarterly financial results on the morning of October 31st that are sending the stock price down more than 11% after the results came out. So is Uber stock a buy on the dip? I'll answer that question in this video. I'll also review the big picture items that investors should know about Uber's latest financial results and update my recommendation, of course, for Uber stock. If you've been following my channel, you'll know that Uber I have rated as one of my top stocks to buy in 2024. And this decrease of 11% is unfortunate because Uber has had a relatively strong year in terms of financial performance, growth in revenue, profits, and cash flow. So let's take a look at this interesting company. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Alright, so Uber CEO saying that they delivered yet another strong quarter for profitable growth at scale, reflecting the strength of the platform, which now has over 25 million Uber One members. Uber One members are those that pay a monthly fee, roughly $9.99 per month, to get lower fees on ordering and taking rides. 25 million members is a large member cohort already, and it's only in a couple of years of development here. And of course, we continue to advance our autonomous strategy, demonstrating how Uber can help unlock this exciting technology for the world. Autonomous driving or driverless car technology is an interesting factor for Uber. On one side, it's a big risk for Uber because there is concern that when Tesla or if Tesla develops its robo-taxi, it'll compete directly with Uber, and Uber will lose so much of its customers to Tesla if or when it ever develops the robo-taxi, which is several years behind schedule. On the other side of the equation, drivers are Uber's largest expense. The largest expense by far for Uber are drivers. So if there are driverless car technology available, and it won't only be Tesla with the technology available, there are several other providers already that are ahead of Tesla. So Uber can potentially benefit from that driverless technology by lowering its cost because it will not have to pay as much for the rides. It can deliver food and move riders at a lower expense. So it's an interesting, very volatile factor that could be hugely negative for Uber, but it can also be hugely positive for Uber. The variation of potential of driverless car technology is massive for Uber. It's a big risk because it can be really bad or it can be really good. Uber saying that gross bookings increased by 16% year over year to $41 billion, and trips during the quarter increased by 17% to 2.9 billion. 31 million trips per day on average on the Uber platform. They have grown to be massive scale, and that's benefiting the company because this is an industry that benefits from economies in scale. And this is one of those winner-take-all industries where you have one or two large players that are viable in any given market. If there are more than one or two players in a market in this industry, that makes it less viable. And that's why one of the strategies Uber has said is, if we're not one of the top two providers in a region, then we're going to exit that region because we understand that this market, you have to have scale. You have to have scale to be viable in this market. And so that strategy has worked well. Overall, the CEO, Dara Khosrowshahi, has done a great job with Uber since stepping in, really turning this company around from an unprofitable growth stock that had little, if any, potential of making profitability under the previous management to now a company that's generating excellent cash flow and excellent profitability. Income from operations was up to $1.1 billion, and that was up by $667 million compared to just $265 million in the same time last year. In other words, income from operations more than tripled compared to the same quarter last year. Similarly, cash flow from operations came in at $2.2 billion, and free cash flow came in at $2.1 billion, highlighting the company's asset-light business model. Remember, Uber doesn't own any of the cars on the platform. Uber is just a platform that brings together riders and drivers and takes a fee for each of those transactions on the platform, or even those that are ordering food to those that are providing food. It's just connecting those and generating healthy fees in the process. I like this business model. You've heard me talk a lot about liking the platform business model. Uber, Lyft, Airbnb, eBay, etc. These are companies, and then the gig economy platform, Fiverr, Upwork. These are companies that just operate the platform and bring together two sides of an equation and take a fee from each transaction on the platform. That business model has proven to be lucrative, and I've been attracted to that business model. Uber operates on that business model. It's one of the reasons I've had it rated as a top stock to buy here in 2024. Looking ahead, the company is forecasting gross bookings of about $43.5 billion, or growth of about 18% in the fourth quarter, which would be an acceleration from the previous quarter where revenue grew by 16%. Additionally, the company is forecasting adjusted EBITDA profitability to increase by 43% year over year at the midpoint. So Uber is expecting continued growth in profitability and revenue acceleration year over year. Strong numbers to be sure. So why is the stock price down by so much following the company's earnings release? I shared with you it's down more than 11% following the company's earnings release. Uber's monthly active platform customers increased by 13% to 161 million, and the number of trips on the platform increased by 17% to 2.868 billion. Now, one of the ways Uber is making more money is by taking a larger percentage of those fees. Remember how I say they bring together two sides of the platform and they take a fee on each transaction? Well, they decide what that fee will be. And so they've been increasing that fee. And for mobility, for rides, 30.5% in the latest quarter, which ended September 30th, 2024. That's up from 28.3% in the same quarter last year. And then for delivery, it increased to 18.6%, up from 18.2%. They've been on this trend of increasing prices and increasing fees so that the company can be more profitable. Of course, this will anger some drivers and riders because they have to pay higher prices, but they haven't been angry enough to leave the platform. As you saw, people keep purchasing on the platform, whether it's for rides or food delivery. And so these higher fees, people have been willing to pay, which has been surprising to me. I thought that people would not be willing to pay these high fees to Uber for food delivery and for rides, but people continue doing that. And part of the reason is, at least for rides, the price of car ownership has increased by so much that taking Uber has become an attractive option, especially if you don't have a family and it's just you by yourself. Taking Uber is so much of an attractive option compared to car ownership. Car prices have increased significantly. Insurance prices have increased. Fuel prices have increased. Maintenance prices have increased. The monthly cost of car ownership is approaching $1,000 a month, and even more in some areas and in some cases. So if you're just going to work, let's say 3 days a week, and you're working from home the other 2 days, or whatever your case might be, taking Uber is an attractive option. And then you don't even have to worry about parking. The cost of parking, I didn't even mention how much that has increased. So on a relative basis, Uber's transportation, the ride services, has become a lot more attractive because the substitute product, car ownership, has become so unattractive, so much more unattractive in the last 3 to 5 years. So is Uber stock a buy on this dip? It's trading at a forward price to earnings of just 21, and it's generating revenue growth even close to this PE ratio, and then profit growth that's much, much faster than the PE ratio, and has excellent prospects for the long term. Of course, with a big risk about mobility and how autonomous driving and autonomous driver technology could impact the business. I'm not convinced that it's going to be a negative for the business. It could be very negative. I understand that, but it could also be very positive if they can implement the technology in a way, maybe license the technology in a way that lowers their cost, increases the profitability, or maybe lowers the prices they can charge and thereby increases the business. So I'm not sure. It could be very negative. It could be very positive. That's a big risk. But I think the reward is worth taking the risk with Uber. And so to answer my question, yes, I still think Uber is a top stock to buy right now. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.